You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is April 5th, 2021. Well, it appears our old friend is coming back to visit the economy, perhaps to haunt it. What friend is that, you may ask? I'm talking about inflation, but real inflation, measurable inflation, not the kind of inflation we've had for the past several decades that just falls by the wayside and nobody can figure out what it is. Well, it's a big concern. Are you concerned about inflation? We're talking about actually decline in purchasing power of the dollar and an increase in consumer prices. That's one measure of inflation. I'd like to know your thoughts. Send us an email to kl@kerrylutz.com. Right now, Jim Welsh is with us, macrotides.com. And Jim, you're expecting a big jump in the inflation number, and you think a lot of people are going to be taken by surprise by it.
I think so, because we've gone through a long period of time, Kerry, where inflation has remained very muted. The Fed recently, and this is very important, changed its operating approach from when previously they referred to the Phillips curve, which showed back in the 50s. Whenever inflation got to low levels, wage inflation surely followed. And so when inflation would drop down to the Fed's calculation of representing a low, the Fed would start to raise the federal funds rate in anticipation of wage inflation. And what Powell has said is, you know what, that relationship is broken, isn't happening. We proved it in 2018 and 19, where inflation was or the unemployment rate was at a 50-year low, but we saw no inflation. So the Fed has now said, we're going to wait for the inflation to smack us in the face. However, since we think the coming wave of inflation is going to be temporary, we're not going to overreact. And so I think we're setting up for a collision between a big jump in inflation in the next few months and the Fed's resolve to kind of stand pat and keep monetary policy where it's at. And then I think the bond market is going to, express its opinion and vote a little bit differently. So the stage is set for, I think, some real dynamics over the next few months.
And you're believing that this is going to affect the stock market adversely? Because, look, we've gotten all this inflation already. It's baked into the system. As the Austrians say, inflation, they define it as an increase in the money supply. Well, we've got zillions of dollars more in the system. So the stock market's been going up anyway. Is this the final knife in the heart of the bull market?
I'm not sure. I wouldn't say that will be the cause, because, the Austrians have to also acknowledge that the velocity of money has collapsed. So what that underscores is, the Fed's pumping money into the system, but the money isn't getting into the economy in a way it used to. And instead, we're seeing the inflation of asset values, obviously stock prices, housing values. And so the game has changed a little bit in terms of where the money is going, where back in the, many decades before, it hasn't. Now, the coming bout of inflation, just a couple quick examples. Gasoline prices are up 60% from where they were a year ago. The Labor Department ascribes a 3.3% weighting in the headline CPI to gas prices. Well, you don't have to be a math genius. That's going to add 2% all by itself. You've got supply chain disruptions, so that auto companies are actually having to cut production. And they're also reducing discounts by about $600 per vehicle. So you got a combination of less production, which hurts the economy, but at the same time, consumers are paying an extra $600 more because they're not discounting. So, and the computer chip shortage that's hitting the auto industry is, pretty severe. That's going to last for a while. You've got issues at the ports. So many containers are coming in. We don't have enough trucks to move all the stuff off the port. So the supply chain issues issues, Kerry, I think are going to be very impactful in the next handful of months. But some of that stuff is going to unwind. And so we're going to see this big spurt. I think the CPI, when it's reported on April 13th, and in the subsequent months, the headline CPI, I think, is going to jump over 3, maybe get to 3.5%. And then the core rate is going to start to gradually rise. So I think the risk is the Fed's going to stand pat. But I think a lot of people are going to look at it and say the Fed is behind the curve. They're going to have to raise rates more aggressively to play catch up. And I think if and when the 10-year gets above 2%, in the very short term, I think Treasury yields, crazily enough, are actually going to come down a little bit. Very oversold. Sentiment is universally negative. So I think you get a dip in Treasury yields. But I think as we get into the second half of this year or around mid-year, we're going to start to see Treasury yields go up again. And I think that's when it could be problematic as the markets start to think that the Fed is going to start to raise rates sooner and more aggressively. And at that point in time, I think the market could be vulnerable, especially the cyclical sectors, which are obviously benefiting from the reopening. So I think there's more strength to come in the short term in terms of equity markets. But as we get beyond mid-year, I think that's where things become problematic.
All right. And that's not too far off in the distance here.
Yep.
So tell me, what do? You think that gold and precious metals mining sector will be a beneficiary?
Don't just survive, thrive. The Financial Survival Network.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beaty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful. It's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beaty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I do. Gold recently last week almost fell to a new low, but it didn't. It held above the low it hit at 1766, while silver dropped to, it was like 4.5% below its prior low. So you have an intermarket divergence. The GDX held comfortably above its prior low. So to me, yeah, the gold, silver, and gold stock sectors are poised for a rebound. I think into the summertime, gold, I think potentially at least can get up to 1900, maybe 1950. And I think there's an outside chance that the GDX will get back toward its high from last August at around $45 a share. So I think this inflation news is going to finally turn on a light. The last inflation report, they've been pretty benign, Kerry. So it's like people have this, inflation may be coming. But as Mike Tyson said, everybody's got a plan until they're punched in the nose. And I think it's going to take a few data points to get money to people to wake up and say, hey, maybe I better own some gold stocks, own gold. And, if Bitcoin goes through a correction, which I think is also possible, that would suck some money from Bitcoin into the, if you will, the traditional inflation hedges. So that's one area that I think the metals and gold stocks, I think, should benefit over the next few months.
All right. Well, really interesting here. I think you're onto something here, Jim. I think that money printing on the scale that we've seen has consequences, and we're going to find out what they are short enough. So Hey, just tell us where we find you these days and how we connect with you on the web.
Yeah, easy enough. Macrotides.com. You can always send me an email, jimwelshmacro@gmail. And my Twitter handle is also jimwelshmacro. So as always, Kerry, thank you so much. Always enjoy talking to you. We're in the middle of some exciting times, I think, in the next few months.
Oh, yeah. A lot of fireworks going on, because if you don't think inflation's coming back, then you probably are an ostrich and have had your head in the sand. And it's about to come back with a vengeance. No question about that. Tell us your thoughts. Any questions for Jim? Email is kl@kerrylutz.com. Sign up for a free newsletter at financialsurvivalnetwork.com. Jim, always a pleasure. Talk to you again real soon.
Sounds good, Kerry. Take well.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.